All right, let's discuss candlesticks. So candlesticks represent market information or the data that is being collected. We see it in a candle. And as we all know, we have monthly candles all the way to 1 minute candles. We all pick the time frames that we want to look at. And I suggest it's best to stick to a certain pair and a certain time frame so that you can study how the candles are represented to you, because most of the times markets usually do the same thing or almost the same thing. So you can use that information to your advantage. All right. So candlesticks, right? On our candlesticks, we have a candlestick body and an opening, a candlestick opening, and a candlestick closing. So let's look at this certain candlestick particularly. So we have the opening. If price is going up, the opening is at the bottom and the closing is at the top. If price is going down, the opening is at the top and the closing is at the bottom. All right. You can't have an opening at the top when a candlestick is going up. That doesn't make sense. So the opening is at the bottom when price is going up, and the closing is at the top because price closed above the opening price. That's why the candlestick was going up. That's why the candlestick was bullish. So price closing below the opening, that means price is bearish. Price was going down. All right. So the opening is always a good area to look at to see what happened. All right. So we have an opening, we have a closing. All right. This is the body of the candle, right? This is the body of the candle. It doesn't matter how small it is. If the area is colored, that's the body of the candle, right? So that's the next thing to keep in mind on candlesticks. After the body of the candlestick, you have the wick. Now this is the wick. This is the wick. This is the wick. These are wicks. These are all wicks of the candle, right? You know how normal day-to-day candlesticks have wicks? Those are the wicks. So how are these wicks formed? These wicks are literally formed on the lower time frames. For example, if we are to look at this certain candle that we have right here, right? Let's highlight this candle, right? Let's go on the, let's go on the 15-minute time frame and see how the candle formed. All right. So that would mean, could you say this area particularly? 30-minute, right? This is our opening of our 30-minute candle right here, right? Now let's go on the 15-minute time frame. As you can see, that means the opening was literally right here. All right. So the first 15-minute candle was a bearish candle. It went all the way down. It went all the way down, as you can see, right? And then it pulled back. It gave us a closing right here, right? And then the next 15-minute candle went lower a little bit before it put all the way back. So the opening was right here, and then it closed right here. All right. So these two candles combined are what created the 30-minute candle that we have right here, right? So that means the first bearish 15-minute candle that you saw, the first bearish 15-minute candle that you saw went down, right? The first bearish 15-minute candle that we saw went all the way down, right? And then it put back up, it closed somewhere here. But because our next 15-minute candle was bullish, it reversed all this price action creating this week and continuing price to go above, and it closed right here. So that 50-minute candle that we saw literally closed right there. All right. So this 30-minute candle, right? Let's put another line right here. Our closing was right here, right? Right. This is our opening. This is our closing. Let's go back on the 50-minute time frame. As you can see, this is the 30-minute candle. These two 15-minute candles. That's our 30-minute candle that we're looking at, right? Price opened right here. That's the area that we highlighted on the 30-minute time frame. All right. So instead of us having this bearish candle on the 30-minute time frame, this information was covered by this bullish candle, creating a wick. So we have a wick until this area. Then from this area, we have a bullish body, right? And this is our body all the way to our closing right here, as it's shown on the 30-minute time frame. All right. So wicks are basically created or formed on the lower time frames. It's just price going lower and then going higher, or price going higher and then going lower. Because remember, all of our higher time frame candles on the lower time frames, we're just breaking down all of those higher time frame candlesticks. All right. So even if we are to go on the 1 hour time frame, on the 1 hour time frame, and then we look at this candle right here, our opening is right here, our closing is right here, and we have an upper wick and a lower wick, right? It's a bullish candle. That means our opening is at the bottom, the closing is at the top. Now, if we go on the 30-minute time frame, we have a 30-minute time frame that is a wick at the bottom. So the wick at the bottom is the 1 hour time frame wick that you're seeing right here. You can even see that the size look the same. So that's the 1 hour time frame wick that you're seeing on the 30-minute time frame. The bottom wick on the 30-minute time frame, that's the 1 hour wick that we are seeing, right? And then when we go back on our 50-minute time frame, if we look at the upper of the next 30-minute candle, it is an upper wick right here. If we go on the 1 hour time frame, that's the same exact upper wick that we have on the 1 hour time frame, right? So these wicks were created on the lower time frames, only that they become more stable on the higher time frames, and we can actually use them to our advantage. So that wick itself would have created a range. We would discuss that deeper in further videos, but for now, that's how the wick was formed. If we go on the 50-minute time frame, on the 50-minute time frame, we can see that price opened exactly right here, both on the 30-minute time frame and the 1 hour time frame, right? And it created this lower wick that we discussed, right? And this is the body of the candle, both on the 30-minute time frame and the 1 hour time frame, right? And then if we go on our next 30-minute time frame candle, it even came down to retest, created a wick, but this wick won't be shown because we already have a body, and this is a 1 hour time frame candle. This is just the 50-minute time frame candle, but on the 1 hour time frame candle, when we put all of this information together, we won't see this wick in particular. But if you look at our top right here, price went all the way up, right? The 30-minute candle closed here, but the 15-minute candle. But the next 15-minute candle, instead of closing all the way up here, if it had closed all the way up here, then we wouldn't have a wick at the top. But price pushed down, all right? So this push down is what created the wick. Because instead of us having this bullish information, we were introduced with some bearish information, and this bearish information created the wick. All right. So we're saying we had the bullish information first, right? And then they added the bearish information, right? And that information together produced the wick on the higher time frame. Right. So for you to understand higher time frame candles way better, and for you to anticipate some candlesticks that are being created all you need to do is you need to watch the lower time frames also. So if I'm trading on the 1 hour time frame, I would want to watch the 30-minute time frame so that I can see how my 1 hour candlesticks are being created. If I'm trading the 4 hour time frame, I would want to see my 1 hour time frame candlesticks so that I can see how the candlesticks are being created. Same as daily, you want to watch your 4 hour time frame candles, because remember, in a day we have 6 4 hour time frame candlesticks, I think. And then weekly, you want to see your 5 daily candlesticks to see, oh, price went down and then it came up. So that's what created the wick. That's what created the range. This is what created what and what. All right. So depending on what you are trading, on the time frame that you are trading and the candlestick that you are watching on that time frame, you want to watch the next lower time frame. You can even go lower, but don't overwhelm yourself with too much information. All right. So for this video, that's it. We'll go on to the next one.